What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we completed yet again another bear traps as we continue to see SPY breaking out and now possibly telling us that the bear market is over with today's very bullish close. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 1.69% as we blasted right through that resistance at SPY 421 and completed our sixth bear trap because yes, we have been counting them. And I must confess to you that I was completely wrong. I told you the SPY bear was at 421 and he is actually at 433. So I apologize for incorrectly telling you where the bear was. However, I did warn you that that bear was very smart, and on the Stocks Channel Discord, we do call him Big Brain Bear, and he is not going to sit in the way of a short squeeze rally, knowing that the bulls are converting bears into bulls as they squeeze through resistance. So this bear is going to be very careful when he chooses to attack, and he is going to wait until the retail bears capitulate, and he will not try to short this market until everybody in the retail crowd capitulates out of their short positions, because he does not want to bring you along for the ride to the downside. So you can continue to go against the bull trend, or you can follow the chart and the price action as I continue to teach you to do, and I continue to tell you to just manage your risk, and you will not get caught holding any bags to the downside if you know your risk levels. So right now on SPY, the first thing I want you to do is I want you to up your risk levels to SPY 421, so that if we do get a reversal from this level, you are guaranteed to lock in profit and get risk off below 421. Now with that being said, above SPY 421, I want you to stay on this bull because this bull is only getting stronger and more momentum, and our next price target is all the way up here at SPY 433. And if we break through that level, we are going to continue to go even higher. I have been doubted this entire bull run, and that is why I've been counting the bear traps and being very open about my convictions, because I have nothing to hide from you, and if I see something on the chart, I have no problem giving you my opinion. But you have to face it at some point that it's no longer my opinion and it's just facts. And looking at this chart, it is factual information that this is bullish price action in a bull trend. Maybe it was my opinion in the very first early claims that this was a bull trend and those were bear traps, but looking in the rear view mirror, we can now see that it's completely happened and it's factual information, which maybe gives you a hint that when I'm looking at these charts, I possibly know a thing or two about what I'm looking at. So if you continue to go against this bull trend, I continue to warn you that you are going to lose money because this is a very powerful bull trend that is going to be very difficult to short. I don't just sit here and tell you that so that you go against what I'm telling you. I'm trying to help you. So if you don't understand that this information is offered to you for free, it is there to help you, and you inversing it is only causing you to lose money. That is completely on you. So this is a very simple market right now. SPY is either bullish above 421 or risk off below 421, and we are going to stay on the bull for upside price targets as long as we're in the bull trend and as long as we're above support. This was an extremely bullish candle closing at a brand new daily high and closing at the high of the day, and we saw buying pressure all day long as shorts continue to get squeezed, and we only see more bears continuing to pile in. The more you pile in, it's like throwing gas on the bonfire, and I strongly suggest that you just go in the direction of the trend, and if you want to get bearish, wait until we break below support. Below 421, we could come back down to 416 or close the gap at 413, and that is why we want to get more risk off if we break down below 421. On the NASDAQ 100 triple Qs, we were up 1.95%, and we did get the confirmation of the bull breakout with the third day in a row closing back over that extremely critical resistance trendline that I do believe defines the bear market in the triple Qs, and we are now breaking above that level at 324 for 3 days in a row, and we are getting a lot of bullish price action confirmation closing at the high of the day, well on our way to that next price target at 334 and possibly even the 200 simple moving average all the way up there at 342. So again, these are very strong bull trends, and as you can tell, we continue to go higher with the price action as the trend is pushing price higher. So manage your risk on the triple Qs at 324 or this gap fill zone right around 319. If we start losing some of this support, it is going to look a lot more bearish, and it does look like we will be correcting this bull run, but we do not know when we are going to break support until the price action confirms it. If you've been trying to guess where the top is and trying to short this market, I already know you know that is very difficult to do, so I do not suggest doing that. you're going to have a much smoother ride if you just buy off support and go in the direction of the trend and manage a risk from a critical support level. In the Dow Jones DIA ETF, we were up 1.23% as we get a direct hit on our next price target right around 338, and we are very close to the 200 simple moving average, which is right around 339, and we do have a price target above that at 341. So we are well within reach of our next price targets, and we do have the bull trend, and you will want to manage a risk in the Dow Jones from this level at 333, because if we break below that, we're very likely closing the gap at 329. So manage your risk very tightly the higher we go, but do not be afraid to trade bullishly while we have the bull trend. Just set your risk at critical support and let it rip. On the Russell 2000 IWM ETF, we were up 2.04% as we closed back over our 200 simple moving average and over that price target at $200, which means we could be well on our way to the next price target at 205 and then 207. Manage your risk at 196 because below that we'll likely close the gap down here at 192. But as long as we're above 196, stay on the bull and just get more risk off if we lose that support zone, because we could come down to close the gap or come down to support at 191. On the ARKK ETF, we were up 4.19% after we bounce off the 5 EMA, confirming that we still have the bullish price action and the bull trend, but we need a daily close above 52 to get to our next price target at 55.5. There's obviously sellers at 52, so when we break through that level, we will start getting that next leg higher. So set your risk above 52 or down here at 49 and stay bullish as long as we're above 47. And you're expecting a return of the bear market in the ARK ETF if we start closing below 47, but it's very unlikely now that we have the strong bull trend. In the VIX, we were down 3.32% today as we did get the second day in the last 3 days of the VIX closing down below 20, which is only giving us more confirmation that the bear market is likely over as we're going back into a bull market. So this is an extremely bullish development, and as you can tell, the VIX is still in a very strong bear trend. On Bitcoin, we're currently up about 0.9%. Bitcoin is starting to break out above 24,000, which means we should be getting a very impulsive rally all the way up to 28,000 in the very near future. So you are staying bullish as long as we're above 24,000 or the previous higher low at 23,000, and you can get a lot more risk off if we break support. But so far, this is looking like a bull trend, and we're very close to going full bull once that 20 simple moving average starts crossing back over that 50 EMA. Continuing with the big tech company hot stock names, we have Amazon bumping its head against resistance right around 144 yet again, but we are coming into resistance with a very strong bull trend, which should eventually help Amazon blast through and get to that next price target at 152 and then 154. You're staying bullish as long as we're above 138, and below 138 you can get more risk off for a retest of 134 or our support trend line right around 130 and anywhere within that zone of that gap. But if we do lose that support, just get a little more risk off for a potential deeper pullback down to the support trend line. But so far, it looks like we're just consolidating below resistance, getting ready to blast through it. On Microsoft stock, we were up 1.7%, closing over our price target at 290. So it does look like we are well on our way to the next price target at 296 because we do have the full bull trend and the very bullish price action. You can get more risk off below 290 for the gap fill at 283, but you will want to stay bullish as long as we're above 283 because we do have the very strong bull trend that is going to start pushing price higher from here. On Nvidia stock, we're up 4.27% as Nvidia continues to push higher, and it now has the full bull trend with the full bull price action. So you can stay bullish on Nvidia as long as it's above 180, or if you want to use a lower risk level, use 176. You're getting more risk off if we lose support for the gap fill to the downside at 157. But as you can tell with the lower Bollinger Band, there is not even allowing room to go any lower to fully close that gap. So this is looking a lot more bullish than it is bearish. To the upside, the next price targets will be 192 and then 196. On Tesla stock, we were up 4.68% as Tesla regains the full bull trend with the full bull price action, closing back above all the moving averages after getting that strong bounce off support. So clearly that level right around 863 is acting as support as we are now bouncing from it. So the next bull breakout will be the confirmation in the break above 904, which should be a very quick trip to 970. However, there is the possibility that this is getting into some type of consolidation wedge. So do not be surprised if we eat some time off the clock before we go up there and attempt to make a brand new all-time high. Right now, this is my preferred scenario, but I cannot deny the fact that it should be a very quick trip if Tesla starts closing above 904. That could take it into the 970 zone. So no matter what happens from here, you will want to manage risk around that level right around 904. On Apple stock, we were up 2.14% as Apple breaks and closes above the next price target at 170 and is now well on our way to the next price target and gap close at 174. And I do expect that to be very strong resistance, which could mean the stock market could be ready to cool down once Apple gets to that level, because I do believe as a market moving stock, Apple could put a lot of downward pressure on the market if it does start to pull back. However, we can never say anything for sure, so manage your risk around this support now at 170 and the gap fill at 166, and get a lot more risk off if we close below 166. On the financial sector, we were up 1.57% as we gained the full bull trend today, and as I said yesterday, we were getting increasing buying pressure, so the financial sector is looking very, very strong right now. The industrial sector was up 1.5% today, and you still see the very high buying volume with the bullish price action and the strong bull trend. The healthcare sector was up 1.28% today, and we still see bullish price action with a full bull trend, and we could be seeing things moving in the healthcare sector very soon. The energy sector was up 0.76% today and starting to regain the bull trend the longer it continues to close above 75. So jumping back over to the S&P 500, I continue to remind you that go with the direction of the trend because it is a very difficult time trying to go against the trend. So I still suggest not bothering trying to short this market until we lose critical support. Remember, the chart doesn't lie to you because price action is king. And as long as we continue to get bullish price action with a strong bull trend, we want to continue to ride this bull and we want to take the path of least resistance, which is still higher. I continue to warn you against shorting this market, so I will continue to do that until we lose the bull trend because it just doesn't make sense to accumulate short positions. If you're going against the trend, you need to have very strong risk management, and it's a very difficult thing to do. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly, and we are crushing this market. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.